Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
New York coffee. So the pattern construction that led to the market moving higher in the first place started in between mid-March to early May with the bullish shift pitchfork, which was breached then broken on the top side 2 weeks ago. However, the move up faltered quite badly at the start of last week, only to be rejuvenated after midweek and this week to make new highs. Thus we are now back up over the broken upper time, currently at 311, and pushing up over last week's highs at 335.45. Below, we have the May 2011 high at 309.90 and the April 2011 high at 303.40. I'd like to discuss the next longer term pattern, and that is the large bright red April to late October this year ascending wedge pattern, currently 260.30 to 272.85. Now this pattern had been biding its time since late spring until 11 weeks ago when we saw a significant false break higher, which only resulted in a small double top over September, an Adam and Eve type. There was also another recent pattern, not so well defined but still there, and one that I thought 2 weeks ago might have triggered, or had been triggered at the end of October. It was a mid-August to late October head and shoulders pattern with the previously mentioned double top being the split head. So you've got shoulder, split head, and then shoulder of the head and shoulders pattern. Now between 8 and 5 weeks ago, the market breached the neckline, currently at 256.5 on the downside, but the aspect of this pattern changed, and instead of a head and shoulders top, it became 5 weeks ago a head and shoulders continuation pattern, railing to new highs more than once this month. That was not all, as in the process of rising higher, prices reached 2 weeks ago the primary target of the bright red ascending wedge pattern, as well as later that same week the secondary much harder to reach target, and then on top of all that a further target topside, one I hadn't really discussed because it was so far away, but a final target topside up in the 333.55 area was reached before prices toppled over. That initial big rally nevertheless left one jarring feature, which I spoke about 2 weeks ago, that November was a monthly key reversal up, a highly unusual pattern to see at the top of the market. I said last week, and I quote, "I'm going to think about implications of such an odd combination, monthly key reversal up but right at the top of the market. I'm going to think about that for a while," end of quote. Well, my thoughts were put aside for a bit as a subsequent drop halted and turned about 180 degrees higher midweek last week on the combination of September 2011 high at 290.85 and the very recent 50% Fibonacci line at 288.60, such that we have, as I said earlier, made new highs today. We now have overhead inversion territory, a 50% projected Fibonacci line at 358.15. But closer to the market, prices have moved up to the dark blue middle time, currently at 350 3/4 of the newly drawn late October to late November bullish Andrews pitchfork. Now this dark blue pitchfork is quite acute, so I'd happily consider finessing this to a shallower bullish shift pitchfork or even retiring it completely. And at this point I'd like you to consider two other possible scenarios, one bearish and one bullish. On the one hand, we might have formed last week the beginnings of part 2 of a double top, or we might have over last week formed a hesitation in a bullish halfway hesitation pattern. Now, it's still too early to say which, but I should be watching this market with interest. London coffee. 22 weeks ago, I initially drew a bullish Andrews pitchfork on my daily chart. 15 weeks later, I finessed this into a shallower bullish shift pitchfork for the same move. This last pitchfork is now retired and instead started concentrating on more in recent weeks on another pattern that also emerged from earlier this year and is highlighted in bright red on my daily chart. It is the late April to early September quite large ascending wedge pattern, currently 48.84 to 53.67. The lower uptrend had been reinforced and also helped in reinforcing both the medium moving average, currently 47.04, and also the significant breaks, and also helped in reinforcing both the medium moving average. And this despite two significant breaks higher and another lower outside the bright red ascending wedge pattern. These disrupted the pattern so much, despite the market today again being back within the ascending wedge pattern, that I will downgrade this ascending wedge pattern next time. Instead, I drew last week a newer and larger pattern that encompasses all the significant recent elements. And by this I mean the dark blue highlighted, shallower bull channel, currently at 43.50 to 57.15. It is not ideal. It is not ideal, as it is quite large. But we do need to have some aspect to what this market is doing. Now, the final stretch higher 2 weeks ago also left us a legacy, as November became a monthly key reversal up, right at the top of the market. Now, I added such last week, and I quote, "I'm going to think about the implications of such an odd combination, a monthly key reversal up, but right at the top of the market. I'm going to think about that for a while," end of quote. I did that also in New York coffee, but here in London, well, here are some more thoughts to consider. The dramatic drop last week led to what is arguably an island pattern, if only just, formed over last Tuesday and Wednesday at the recent low. The topside targets, and they're plural, for this pattern have already been achieved, but we also saw the creation of another pattern, an early November, early December bullish Andrews pitchfork, not dissimilar to the one we've seen in New York coffee. And it's highlighted on my daily chart in purple. Right now, prices are in between the nearer overhead middle time, currently at 46.85. Currently 53.32, and the lower time, which is below, quite far below, down at 46.85. This is quite an acutely bullish pitchfork, much as we see in New York coffee. And I'm quite prepared, much as I also am in New York coffee, to finesse this to a shallower bullish shift pitchfork, or even retire it completely. But for now, this Andrews pitchfork, bullish Andrews pitchfork, is showing the bullish angle of attack of this market.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.